Hey guys, welcome back to another episode. Today we're going to take a closer look at Zscaler. The company just reported earnings, and prior to the market opening, stock price was down. We can see right now stock is pretty much flat. On today's episode, I want to do three things. First, I want to take a closer look at some of the bearish points from earnings and just for the overall company. Second, I want to take a closer look at obviously some of the bullish points. And third, I just want to take a closer look at valuations and some of the financial numbers. So we're going to take a closer look at all that in today's episode. So let's get started. All right, so first let's start off with just top level overview of earnings. The company just reported their fiscal Q1 2024 earnings report. We can see here from Google that the company did beat on earnings per share and also did beat on revenue versus what analysts were expecting. Earnings per share, adjusted earnings per share, was roughly 67 cents versus expectations of 49 cents. Revenue was 496 million versus 473 million of expectations. And we can see it's definitely been a great year to be a Zscaler investor. Stock is up roughly 71% as I am recording the episode, maybe a little bit more right now. Now, if we take a closer look, like I mentioned, I want to look at both some of the bearish points, but also some of the bullish points and then the financials. Let's start off with bearish case number one, or bearish point number one, and it's just the overall macro economic environment and how it's affecting deals at the moment. This is not something that's only for Zscaler. We've heard about it from other cybersecurity companies. We've heard about it from other software SaaS-based companies as well, that right now with macroeconomic environments, high interest rates, customers or their customers are taking a little bit longer to maybe sign the contract, maybe are looking for certain extensions on payments, maybe looking to pay later on, just because right now clients are being very, very cautious in spending.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
I want to say this is probably more short-term pain than anything. I do believe once the the kind of financial market turns around, we're going to start to see some bullish trends, not only here in Zscaler, but in other cybersecurity and other SaaS companies that are seeing the pain of macroeconomics at the moment. So that's bearish case number one. Bearish case number two, in my opinion, is a mixture of both a bearish point, but I actually also use it as a bullish case later on. So the company did give guidance, but because of leadership changes, they're a little bit cautious on the guidance they're giving. So Zscaler mentioned updating their guidance with the level of prudence due to recent changes in sales leadership. The company recently announced a new chief revenue officer and a new chief marketing officer to kind of increase their obviously market opportunities. But obviously with new leadership comes new changes in strategies and execution. So this is not necessarily completely a bearish case, but it does kind of invest. If you are an investor in this company, there is a possibility that in the upcoming quarters you might see some changes in strategies in execution because you do have new leaderships in the moment. Now, bearish case number three. I do believe this one's pretty interesting and one investor should keep an eye out. The company is investing in growth, which is a good thing. I do believe I also use this in the bullish case, but they prefer growth over margin expansion at the moment. The company is investing aggressively in sales, marketing, technology, and cloud infrastructure to obviously pursue market opportunities. So obviously that kind of gives some form of great for long-term mentality, right? Because if you're investing right now, usually when you're investing something, you're investing for the future. So this kind of gives you a nice, I want to say, subtle yes that, hey, look, the company believes that there's plenty of opportunities, so they're rather investing in growth at the moment. But if we take a closer look at operating expenses, well, revenue has gone up by roughly $140 million versus last year. Total operating expenses also went up by almost $100 million. And a lot of that is going in things like sales and marketing and research and development. So right now we can see that this company is investing heavily in growth. And even though we are seeing that revenue growth, total operating expenses is also growing with it. On the bright side, though, right, on the bright side, we do know that gross profit is growing at a faster level than total operating expenses. Now, bearish case number four, concerns on execution and sales capacity. And this is probably one of my favorite. It kind of brings up all the other points together. So the company didn't really mention much negativity here, but I do believe, kind of looking in between the other bearish points, it kind of brings up this point right here. Let's look at guidance real quick. So for the up top is their last quarter guidance. So they gave for quarter four of fiscal 2023, they gave a full year fiscal 2024 guidance. And here we see that revenue was roughly 2.05 billion to 2.06 billion. Now, with the end of this most recent quarter, they obviously updated the guidance. And in the guidance, you see a few things. First, they did increase revenue by about $40 million or so on the bottom end, but they did not increase calculated billings at all for the year. And that, in my opinion, is kind of interesting because the company did numerous new things. They did increase their investments in growth and they continue to invest in that. They got new leadership to expand market opportunities, and they're also increasing their sales capacity. So by doing all those three things that they just mentioned this quarter, obviously investment in growth is not new, but the other two are kind of newish to this quarter. This company did all that and they still were not able to update their calculated billings. So in my opinion, this kind of showcases that, hey, there might be some concerns about the company's ability to meet their prior guidance. So so for them to be able to meet that guidance, they had to increase investments dramatically. So next, I want to take a closer look at bullish cases. But first, I do want to say thank you for the support here at Jose Najarro Stocks. We're trying to hit 30,000 by the end of the year. So if you haven't, make sure to hit the thumbs up and the subscribe button. I do have a semiconductor membership program, exclusive videos. Click join to learn more. Special offer at fool.com/Jose, and some other pretty cool links down on the pinned comment. All right, so now some of the bullish cases, and I do believe for Zscaler, we are seeing a lot of growth opportunities here. And right off the bat, we can see strong revenue growth. Zscaler reported a 40% year-over-year revenue growth, kind of showcasing a strong demand for its services. This also, we can see here, revenue was up 40%. Calculated billings was also up roughly 34%, where guidance was roughly 30%. They do have nice gross profit margins and all, and we can see free cash flow. Outside of that, Zscaler does tend to have high customer retention and upsell opportunities. For example, Zscaler dollar-based net retention rate stood at 120% and high 90% of gross retention rate. So obviously, this does bode well for future revenue growth, especially if the company continues to invest and innovate in new products. So obviously, bullish case number one is this company has a huge growth opportunity. Now, if we take a closer look at bullish case number two, there's two major things here, and it has to do mainly with their customer base. So they did have a solid customer base expansion. They did achieve a record number of new logos, with 14 new logos with over $1 million in annual recurring revenue. The other thing is they are seeing expansion in their federal business. They did mention that they saw significant growth in the U.S. federal sector, with business up over 90%. And we know the kind of federal government does have more of a stable wallet. So this is obviously a stable revenue stream for Zscaler. And obviously, getting big wins from the government kind of just showcases that, hey, look, this is definitely a good product that big players are watching right now. So we definitely see that overall kind of growth in customer expansion. They did kind of showcase some quarter one 2024 deal highlights. Now, if we take a closer look, they continue to see large customer momentum as well. Like we see 1 million customers with over $1 million of annual recurring revenue continues to grow quarter over quarter. Maybe this quarter was a little bit weaker than others, but still, it still was a growth quarter over quarter and year over year. Very similar to also customers with over $100,000 of annual recurring revenue. So again, I do believe we're starting to see kind of that pain of bearish case number one, which was kind of the macroeconomic environment where things may be flattening right now, as there is as the larger deals take a little bit longer to kind of sign off. Now, if we take a closer look at bullish case number three, the company is diversity, has a diverse product offering and innovation. They are focusing in things like artificial intelligence, and they're also focusing in emerging market opportunities. For example, they do mention that enterprises are rushing to things like generative AI, despite the huge amount of security risk behind a lot of this generative AI tools. So that's obviously a good growth opportunities. They do mention that, hey, look, this is the problems with Gen AI. Our platform is able to solve that. So that's obviously good. They also do talk about Risk 360, which is generating strong customer interest and is their AI powered holistic risk quantification and mitigation system. They do mention they have numerous six-figure deals. They do have 10 plus deals that have closed, and they are over 100 plus enterprises in active evaluation. So the company continues to focus in new solutions. They also did announce the industry's first zero trust connectivity for cloud workloads. Now, bullish case number four, I kind of used as bearish cases before, and we can see the company did appoint new leadership, like we saw the new CRO and the new CMO, and the company is also investing in long growth in things like sales and marketing. And obviously, that might be short term pain, but in the current market, they're able to get market share that obviously is going to bode well in the future. So, while in my opinion, this can be seen as both a bullish and a bearish case, it's something investors should keep an eye out. For example, like I mentioned, they did have the new CRO and CMO for their cloud security business. But also, they did announce new appointments for Chief AI Officer and also the Vice President of Data and AI Platforms to continue to evolve those artificial intelligence and machine learning products that they have. So, obviously, the bullish case is they continue to invest in new solutions as well. Now, I just want to final off this episode with financials. We can see cash and short term investments are a good portion of this company's total current assets, roughly 2.2 or $2.3 billion there out of 2.9. The other thing is the company doesn't have much debt. They do have convertible senior notes of 1.1 billion. The company has plenty of cash to be able to do that, but the company's most of their total liabilities actually comes from deferred revenue of 1.3 billion dollars. So overall, company is positive in free cash flow from operations, is positive in operating activities. Overall, financials look pretty good. Now, if we take a closer look at kind of valuations, forward PE ratio 1 year is roughly 65. Forward, which is the end of this fiscal year, is roughly 79. Obviously, this company, when looking at PE ratio, trades very expensive. Now, if we look at price to sales ratio, in my opinion, price to sales ratio is also a little bit expensive. Forward 1 year at roughly 10.77. This is definitely, in my opinion, a company that has run up a nice amount, maybe small dollar cost averaging if I really wanted a position or increase my position. I do have a small position in Zscaler, but it's not one that I would go crazy buying at the moment. But let me know your thoughts on the comments below. Am I wrong here? Is this a great buying opportunity for Zscaler, regardless of its 17 price to sales ratio at current values? If so, let me know in the comments below. Take care, have a good day, and see you next time.